Hello everyone. Today, let's see how the birth of a new giant has been welcomed by markets. And this new giant is the European Union, the EU, that issued its first ever green bond. But before diving into the subject, let's remind ourselves that financial theory is not proven right with green bond, because theory has taught us that for the same financial risk, the return should be equal. Well, with green bonds, that's not always the case. And this is reflected in what is called the Grenium, green premium, which indicates that the return on a green bond is different from that of its conventional counterparts. According to a study by Barclays, on average, this premium is 4 basis points. In other words, investors are willing to be paid 4 basis points less to hold green bonds. Since the first green bonds, the Grenium has evolved, and in our days, it reflects, among other things, the imbalance between supply and demand. Over the whole of 2020, $234 billion have been issued in green bonds. Until mid-October this year, it's $411 billion that were issued, 75% increase with still 2 months and a half running. And this also gives us colors on the strength of the demand. And these figures also put into perspective the impressive order book for this first EU green bond, 135 billion euros demand. Beyond the success, it's interesting to note that of those 12 billion that were issued, only 9% was allocated to bank and hedge funds. And if the EU did not want to favor responsible investors, it is clear that this bond is in the hand of rather static investors like pension funds, central banks. And this green bond is the first of many others to come, because 1/3 of the next generation EU program will be financed in green bonds. We are talking here about 250 billion euros, which will make the EU the world's largest issuer of green bonds. So the Union has started with a 15-year bond, and given the demand, it was able to reduce already tight conditions. After the issue, the bond continued to perform. Its yield fell from 0.45 to 0.36%, slightly below that of a non-green EU bond that is almost a year shorter. This is an illustration of the Grenium. These levels are not really inspiring. So how can we explain this demand? We must here mention several factors. The quality of the issuer, which offers a premium over Germany, the growing appetite of responsible investors while supply is still not able to satisfy it, the expected low volatility on such a credit, which offers stability for traditionally static investors, and finally, for the latecomers to the market, such bonds allow investors to build up large positions without taking too much risks. So with the stars so well aligned and with the lights on green, future EU green issues can count on the continued warm welcoming of a hungry market. Thank you.